Good day, ladies and gentlemen, and welcome to the show. Glad to have you guys here on this Wednesday, the 17th of March, 2021. Thank you for tuning in. I always knew sooner or later we'd hit the end of the road, but I can see it now. The bonds, treasuries, U.S. treasuries. Yields are creeping up. The Fed, they can't stop this now at this point. It would be suicide for the dollar, because it would mean direct monetization of the debt that's open to the whole world to see. Basically, that their only answer is to monetize the system. I mean, if that's not clearly obvious already, it'd be clearly obvious. But yet these bonds are creeping up, and there's no stopping them. And the bonds are going to continue to increase in value on the long end of the yield curve. So the Fed's caught in a conundrum right now. They don't want to do something about it because they know that it's basically them getting caught with their hand in a cookie jar, obviously, to the world. But on the other side of this, if these bond yields continue to rise on the long end of the yield curve, they're going to cause a crisis, a massive crisis, and it could come very suddenly as the bonds creep up higher and higher. And they threaten to pop all of the bubbles that the Fed's worked so hard to create and keep inflated all this time. And so behind closed doors, they must be just really concerned about this, but they're going to make it seem like it's nonchalant because they don't want to draw attention to it and attention to what the real problem is right now within the financial system. The big problem is the bonds and these bond yields rising like they are. And so we see today that bond yields are still continuing to rise. And what's the Fed going to say? The only thing that's really going to have an effect is action, not words. So today the Fed's going to get out there and they're going to say a bunch of stuff. Those are all just words. It doesn't matter to me really what they say. What's actually going on and what they're going to do about it is what matters to me. That's what actually means something. Let's get in there and let's open up the charts right here and take a look at what's going on. I'm going to go right to the bond yields right here and show you guys that these yields are going up significantly. And, the U.S. 10-year now is at 1.67. 1.671. It's rose 4.8 basis points today. And what we see is we see it shoot up, and then it finds a new level. It falls off just a little bit, not as far down as it was, and then it goes back and shoots up again higher and higher, and it's been doing this uncontrolled. It's been doing this for months now. But it's starting to get up to the levels where it's going to start to really cut now and cut into the effect of our recovery. And, okay, this is extremely negative. The situation is going on right now is extremely negative for the price of gold and silver. Let's take a look at silver today. It's $25.94. I'm going to tell you, this is extremely negative before the Fed does anything. Let's look at some facts, guys. Here's a fact. The Federal Reserve is going to have to do something about this. Right? This is a fact. They're going to have to do some sort of yield curve control or some sort of operation twist or something. They're going to have to do something. They just cannot let these bond yields go up and up because these bond yields will not stop. They're going to keep going until they exceed the rate of real inflation. Not the bogus inflation numbers, but the real inflation rate. Right now, I would say, by my opinion, that the real inflation rate is somewhere over 7%. And I'm probably being very conservative. Because we're seeing prices on things go up far more than just 7. We're seeing prices go up 7-10% a month. And the bond yields are trying to find this real inflation. We can't. There's no way they cannot. With the amount of debt we have outstanding in the system right now, there's no way we can suffer interest rates at those kind of levels to cover the real rate of inflation. And so what we have is we have inflation moving up right now, and we have bond yields moving up too to try to match the rate of inflation. This can't continue. Inflation is going to go up, and we have to keep the bond yields down. The Fed has to keep the bond yields down for this system to actually function, or the system's going to break. And so that's why I tell you the fact that the Fed's going to have to control this. They got no choice. That's 100% fact that I know that the Fed at some point is going to have to control this. But they do not want to get in there and control it, because the second that they get in there and control it, then inflation's going to run away on them, because that means they're monetizing the entire system at that point. The whole world can see it then. And so they're going to delay as long as they can, but if they delay, the system might start to contract really severely with these high rates that the system can't suffer through. And so what's going to happen is this whole thing's going to break pretty soon, because the Feds, they're going to hold off. They're not going to react until they have to react. They're forced to, and they're going to be forced to at some point in the next few months when these rates get up high enough where they start to actually crush the system, and that's going to come suddenly. We're going to have what we're headed toward, guys. We're headed toward something that's going to look something like what happened in 2008. An insolvency crisis. Directly in our future. Not a long ways either. Probably within the next 2 months, unless the Fed reacts. The only way we're going to stop that insolvency crisis from happening is if the Fed reacts ahead of time. Before the insolvency crisis. We're going to have some sort of I can tell you exactly the spot it's going to occur within the system, but the system's going to fracture someplace because of these high rates. If the Fed doesn't do anything, probably within the next 90 days, the system's going to have a fracture. It's as simple as that. And the Fed's probably not going to do anything. They're going to let these rates continue to creep up until we get the fracture. And who knows where it'll be. In the corporate bond market, maybe. Who knows? Maybe within the real estate market, there's going to be a big fracture. Then they're going to respond to the fracture. The Fed will respond. And the response is going to be probably bigger than you can imagine, because they're going to have to be a big response because the fracture is going to be big. Who knows the thinking of the Fed? Maybe they're thinking to themselves, hey, we'll wait until we get the fracture, and then that'll give us the reason. That'll give us an excuse to come out with gosh knows what. We got an unlimited press, they're saying, and we can do it. We can print any amount of money. We've already told everybody out there we can cover everything. We can buy all the bonds ourselves. We can do UBI and send checks out to everybody on a permanent basis. We can create a central bank digital currency, and we can make the whole system whole again by just giving everybody in America an account with the Fed, and we can send them unlimited money. Who knows what they got up their sleeve? But they're not going to let the entire system completely collapse. They're going to have to come into the rescue bigger and bigger every time, just like they have since 2008. What's the result of all this? Inflation. It's a hidden tax. It's going to rob you of everything that you have. It's going to rob your bank account. Your wages aren't going to keep up with it. It's a hidden tax. It's a tax you don't see, but after a while you start to see it. When prices start to really soar every single day, you start to see the tax. And this is how they're going to default. And, these things are going to suffer. like gold and silver, are going to suffer until we get this break in the system, until something's done about these. So this is a perfect opportunity for people out there to accumulate, because on the other side of this, when this is fixed, these yields come under control again, you're going to see gold and silver then really start to soar in price. And I know I've been saying it's going to soar for a long time, but we're going to see a real soaring in price. It's not out of the question if we're talking $10,000 gold. It's not out of the question. When after the yield is controlled, after they suppress these yields down really low, and they're going to have to take them right down, all the way down to the whole yield curve. Probably you're going to get less than 1% on all the way up to the 30-year. Less than 1%, and it won't move anymore because it'll be totally controlled by the Fed. It's called yield curve control. They'll control the whole entire yield curve, and they'll suppress the rates down, and the overnight rate and stuff will go probably below. They're going to push these yields right down to the floor. And once they do that, that's the signal for the dollar to start to really lose steam. This is the last hurrah for the dollar happening right now. But it's at the same time, it's putting a stop. It's stopping gold, it's stopping silver, and it's stopping cryptocurrencies from advancing. And it's going to stay that way until something's done. And I think something's going to be done in the next 90 days. I think they're going to have to within the next 90 days. And the longer they wait, the bigger the crisis is going to be when it comes. So the higher the yields go in this end. So we're going to suffer through this period right now. And this is a good accumulation time for you guys. To accumulate and get out of the dollar. Because I'm telling you, absolute certainty, 100% certainty that at a certain point the Fed's going to have to control the long end of the yield curve. Or it'll bust the system all to pieces if they don't control it. There's where we're standing with all this. Let's take a look at gold today. Gold is $17.29. It's down $1.60. See, it's keeping the price down on these. The price wants to surge on gold, silver. Silver, they almost have none. It's such a precious element. You know, the silver mines out there, right? The ore that they're digging through. Now, at this point, it's down to 8 to 1. So, for every 8 ounces of silver they get 1 ounce of gold. Right? Now, I know that they say that it's about 8 or 9 to 1. It's right in there, in that area. The miners are digging it out of the ground. I know they say it's like 13 to 1 or something. But no, in reality, it's actually 8 or 9 to 1. That's what the miners are actually seeing on the ground in the mines, is 8 or 9 to 1. How come the price is like been as bad as 110 to 1? What is it right now? I think it's like 70 or 80 or something, you know? But that's not gonna, it can't stay. Silver's too precious in the ground. It's too hard to get. Too much work. Right now what they're doing is less and less ounces of silver are coming out of every ton of ore that comes out of the mines. They've chewed through all the easy silver with these modern mining machines. They've dug it all out already, all the easy stuff. All the low-hanging fruit's been picked. And now it requires more and more diesel fuel to get that silver out of the ground. You know, and so that means the cost of production's going up. And these silver manipulators, these riggers out there, they have to keep up with the cost of production of the miners. Because if they don't, the mines will just say, hey, you know, we can't sell at these prices. And I don't exactly know what the cost of production is right now, but I'm going to guess it was running down around $14 when the silver price was $14. But, you know, it's went up. Everything they buy for the mines went up in price. You've seen how things, you go to a hardware store or something, you see how the prices go up on nuts and bolts and everything. They have to buy stuff like that for the mines. And they have to buy fuel for the mines. And fuel prices have been going up, you know. And so what's going to happen is these mines are going to have a higher cost of production for silver. Probably right now, I'm just going to guess, it's probably about $20. $15 to $20, depending on what mine you're in, depending on what grade ore they have, you know, what the grade is. In other words, how many ounces of silver do they get out of each ton that they take out of the ground. And so what's going to happen is these guys that rig the price on silver, they know not to go below mining production cost, or there won't be any real physical silver. And these companies out there, I mean, right now it's got to the point where these companies are going to have a hard time to start to allocate this stuff. They need to produce things like cell phones, everything, all electronics. You buy a new TV, it's got silver in it. You buy a cell phone, it's got silver in it. Everything that's electronic. And we're in an electronic age, an electronic world. We can't run without silver. So what are they going to do? Well, there's only one other metal they can use, gold, and it's way higher price than silver. I don't know. To make a cell phone, they might have to use gold in the end. If they run out of silver, at least they can obtain gold. You imagine a company like Apple having to go out there and because there's no silver available anywhere, having to buy gold and use gold in their cell phones? They'll just pass the price on to the consumer. That's all they'll do. But, you know, everybody out there is grabbing up the real physical silver. We've seen all the silver stores, places that sell silver across the United States and here in Canada, run into short supply in the last few months. That should be a sign to you guys. Hey, what's going on? The world's running out of silver. And we have to have it for industry and stuff. And they waste it all. It all ends up in the landfill. People use a computer for a year or two, and then they want a new computer, and what do they do with the old one? Ends up in the scrap pile, where it's all crushed off and buried under the landfill, and there goes the silver with it. To reclaim that silver that's in the landfill would cost probably more than $500 per ounce to reclaim it. So they just bury it and leave it in big heaps. All these computers and stuff and all this, they just bury everything off. There's going to come a time in the not too distant future, maybe 10 years from now, maybe 15 years from now, where they will be mines. There'll be mines in landfills digging up these old machines and stuff and recycling the silver off of these circuit boards using different chemicals and stuff. The silver price will go up that high, and the actual mines where they dig the silver out of the ground out there, they'll be getting such a low quality ore per ton. They'll only be getting like 1 ounce per ton. That means that for silver, they'll have to grind up a whole ton of rocks into powder. Okay? And they get like 1 ounce. Right now, I think they're getting like 9 ounces or something. It's dropping, though. It's dropping really fast because they've scoured the earth for silver. And so what it's going to mean in the end, well, the United States Geological Survey, I know I'm starting to rant off here a little bit, but the United States Geological Survey did an estimate on silver a few years ago, you know, and they said it's going to be the first element on the periodic table to basically go in, become extinct. I think that's the words they used. I think they said it was going to become extinct. Silver, because we're digging it out so fast and using it all in industry. Now, gold is a different story. We dig gold out, we form it into bars, we put it in a vault. We dig gold out, we put it into bars and put it in a vault. There's more gold out there than there is silver. Because silver, we consume it all. And the ore grades are dropping every year. Less and less tons are getting out of the ore. They dug out all the best ore. So what do you think's going to happen with silver? We're going to see a price explosion, ultimately. Probably within the next 10 years. So if you're thinking about retirement, you want to know something to invest in, probably within the next 10 years, we're going to see the silver to gold ratio go. It's probably going to overshoot what it comes out of the ground. It comes out of the ground 8 or 9 to 1. It's probably going to overshoot that. But you know what, guys? 10 years from now, the price of gold is not going to be $1,728 an ounce. It's going to be like $17,028 an ounce. And silver is going to overshoot an 8-to-1, probably 6-to-1, 5-to-1. What an investment for your retirement. If for a person that would just get the physical, put it away someplace, and wait 5 or 10 years. It's a hell of a lot better investment than being in the stock market or anything like that. And even if, I'm going to tell you guys what, even if the system were to collapse to the ground, silver's still money. It's always been money, and it'll always be money. Silver is money. It was the people's money for thousands of years. Up until this stupid nincompoop system come along. I remember when it was first starting, this nincompoop stupid business. And I remember when I was a kid, go through your coins, and occasionally you'd see a white one in there. It was a silver one. Everybody was picking them out. This was back around 1968. I remember when I was a kid, and they were all picking them out. It was because of what Nixon was doing. 1971, he took the gold standard away, and the silver all disappeared from our coins. So silver quit being money. Stopped being money by command of the United States. No more silver as money. But, that command, around the world, silver is still money. I don't care what country you go to. You can go any country on earth, silver is money. And it's going to go back to being money again. It's the most solid form of money on earth. Because the internet can go out. The electricity can go out. And silver is still money. Can't do that with crypto, And we might actually have that. The situation that they've generated for us. We might have huge areas. And it's already happened, actually. So I can't say, I can say it with a certainty. The huge areas, the grid might go down. Look at Texas. It's already happened. It can happen again. If it happened once, it can happen again. It can happen in wider spread areas than just Texas. There could be days coming in our future when half of the states are out of power and other halves are on. Some are on, some are off. Where's your cryptocurrency if your power's been off for 6 months? But still, that silver is still money because it's in the real world. Doesn't need the internet function. Functioned for thousands of years before we had any internet. Anyway, my gosh, I got off on a tear, really. Take a look at crypto today. 1701. I'm going to refresh the page and see which way it's turning here. 1703. So it's going up slowly right now. $54,960 for Bitcoin. Can you imagine the price of $54,000? I mean, these Bitcoins back in 2010, 2011, they were like Magic the Gathering trading cards, or like Pokemon trading cards or stuff. They were like 5 cents each, and the only people that knew about them were geeks. Well, now they become rich geeks, but now $54,000 each. This is a real. It's absurd, I mean, absolutely absurd. Okay, let's take a look at the Dow Jones today. 32,855. And it's up 30% today. 30 points today. 0.9% today. Let's take a look at crude oil. Crude oil 63.94. It's down 86 cents. Now the MOVE index 70.81. You see this MOVE index creeping up? It's going to keep creeping up with the bond market. The two are creeping up together. This is insolvency in the credit markets when this gets too high. And 75 is my marker of being too high. Anything over 75. And we're creeping up to that because we were down in the 40s just a couple months ago. Bonds and rates today, we see them creeping up. We're looking at 1.68 on the U.S. 10-year. 1.683. It's heading up toward 170. When's the Fed going to react? That's the big question. And that's the big question for gold and silver. You guys out there that stack gold and silver, that's the big question that should be on your mind right now is when is the Fed going to react to this? Because it means everything for the price of gold and silver. And your accumulation phase might be over when the Fed reacts. And I would say it's going to be within the next 90 days. I don't know what they're talking about today. They're going to have a big talk. The Fed, Who knows what they're going to say, but I don't think they're going to do yield curve control or a new operation twist today because it's not in a potential dire situation yet. They'll wait till it's in a dire situation, then they'll do it. Okay, let's take a look at the U.S. dollar index, 91.96 and going along sideways. Well, guys, that's been your show for today. Thank you for listening. Thank you for tuning in. Like and subscribe. Comment in the comment section. Give me a thumbs up. Hit that notification bell or icon, Do all that good stuff, and that's great stuff for my channel. It really helps me out. I really appreciate when you guys do all that stuff, It helps keep my show coming to you guys. Every little thumbs up helps to keep my show coming to you guys, It helps to pay for the gas. It helps to pay for the cameras, and it helps to pay for everything that the editing that I have to do. Yeah, I have to buy editing programs and software, and the list goes on in order to keep this show coming to you guys. And it requires you guys pushing that little thumbs up icon, and that little notification bell, and actually watching my show. It would really help me. I'll tell you, you guys, if you go back and find some of the funnier older shows from way back when and watch one of them or something, that helps my channel too. All that kind of stuff helps my channel out, and I really appreciate it. So thank you guys for listening. Like and subscribe, and we'll catch you guys in the next episode. Bye-bye.